Hello, everybody. Welcome back to the Black Swan Capitalist channel. So today we have a very special guest joining us. That's Henrik Zeeberg, an economist and financial analyst with decades of experience navigating macroeconomic cycles and global financial markets. He actually holds a master's in economics from the University of Copenhagen and currently serves as the head macroeconomist at Swiss Block. Thank you, Henrik, for joining us today. Happy to speak with you.
Thank you for having me on today.
Good morning.
Yeah, we're very happy to have you here. We've been following your content for a very long time, and it's interesting because you have a very remarkable track record. You seem to be very on point with a lot of your calls, and you understand how everything evolving ties into the traditional financial system, the business cycles, the global liquidity. And the first question I wanted to ask you, Henrik, is what's your global outlook on the economy right now? And where are we in the cycle?
So we are very late cycle now, as you may remember also. Thank you for the kind words, guys, and for following that and for having, remember this. We're very late cycle. We have as you may remember also, in April when I said, we this is not it, when everybody started to come out and say this is the recession now setting off. The same in 23 when we had the banking situation also there. There was the can't remember the names. I was Silicon and whatever they were called, the banks that went under. And then we had also in 22 when we had inflation spike and everybody came out and said we have now the recession is here. And every time it was not really just a buy the dip opportunity. We saw rather deep dips in the market, yes, but it was not a recession. These were not recessions. And what we have now is that we have the most overvalued market ever. We have the largest speculative bubble ever. When you look at tech stocks, if you look at the housing market, if you look at crypto, also, this is all a part of what I would call what is a natural end game of when you have easy money policies going on for so many years. So I know we don't have that right now to the same degree, but we have had it for a number of years, and that is really what has pushed valuations to the breaking point, to a stretch. Today we have Nvidia's earnings coming out, and we can just look at their chart, and it's I thought Cisco back in 2000 was a gigantic bubble, and it's just dwarfed by what we see with Nvidia. So this is speculative. This is what happens when you have crowd dynamics going crazy and explaining and telling ourselves that this time is different and so on. So we are very late cycle business cycle wise. We have on my business cycle a crossover to be confirmed here in September on my coincident index, which means that this is really telling us that now the shit hits the fan, potentially in Q4, and that is the situation like what we had in 2007, 2007 actually, where we saw the crossover of what was the leading indicator in November 2006. And then the recession starting 1 year later in December 2007. We also had a crossover here in November 2024. That's not the time when things are starting to decline. That is the time when we start to see, okay, now the economy starts to deteriorate. And I've been saying to our clients and on other interviews for this whole year here, that it's just a matter of time when we start to see the coincident indicators, the real economy starting to deteriorate and starting to see bad numbers there, and they're coming now. So every time I got smacked in the face in, let's say, May and June and so on back a few months ago, well, it actually turned out that the numbers were not correct. The non-farm payrolls were not correct, and that's what we see. And if you look at consumers, they are. I talked to you guys now also about that. People are underwater. Mm-hmm. And it's unbelievable to see the stupidity, excuse my French here, of the financial world and of the Fed and so on, to see that people are not that they can't see that people are struggling. I find it very, very worrying that you have such a disconnect between what is the real economy, real people, and then the euphoria of the financial markets, and then even more of the Fed, who were supposed to have their finger on the on the pulse there and actually understanding what's going on. So we have a massive bubble that is coming to an end, and it's going to burst within months now. And I have a target which can be up to 7,500 on the S&P, but it could actually also be lower. Now I can see that things are maybe developing a little faster, and it's going to be bad. The worst part is not going to be that the deflationary part, which is what we saw in 2008 as well. It's going to be the part when the Fed comes back in again and think that they have another free lunch and they can just shoot their bazookas with another shot of liquidity, and then everything will be fine. It will not. And I think it will come to a painful end, and that end will be stagflation. So deflation, the Fed comes in, a bounce, and then a very, very severe stagflation, which there's no easy solution to. So we are in a bad state. We're in a bad fix here, and it's going to be bad. I mean, this is the Titanic actually starting to sink, and it's about getting to the lifeboats in a not too distant future, even though there will be a little more drinks and a little more music still before we go under.
Yeah.
And quick follow-up on what you just said. When you say there would be a few more drinks, you're referring to we have a bit more asymmetric upside before that blow off top that you constantly refer to, correct?
Yeah,
we have a little more room to go, perhaps maybe a few months, give or take, something like that. And that applies to all markets, right?
It applies mostly to U.S. risk-on markets, yes, and especially to U.S. and tech, and especially and to crypto. I don't think we're anywhere near the crypto top at this point here, but that is not a good thing, and unfortunately, because if we start to see that, that's normally in the speculative phase of the crypto cycle. Also, we see this, and then we come to a bad end. We are, there's unfortunately not much good to be said at this point here, because this is the point that everybody has been pointing to and saying, okay, there will be a problem down the road, but they can just kick the can, and they, eventually we start to tell ourselves that they can just keep kicking the can. The problem is this time around that we actually have seen inflation coming back, and that is the ugly truth that comes out now, that oh shoot, we can't just print wealth. So this about that you can just keep throwing liquidity on a problem and then thinking, oh, it'll be fine. And then, next time we have a problem, let's throw some more liquidity on it. You keep doing that for a while, and then people say, yeah, hey, we've done it 10 times, 20 times. It's a fine, it'll be fine again this time around. Unfortunately, the difference is this time that inflation has now showed its ugly head again. And it's not because I think inflation is going to go straight up here. It's the trajectory. It's difficult when it's not your for the inflation here that what I look at, and you can see actually that there's a shift now, and the shift comes to that people have all of a sudden understood that inflation is a thing. It hasn't been a thing for 20 years, and all of a sudden it's like, whoa, you can have 9% inflation. Whoa, prices have really risen now. We were, far above what we were a few years ago. And that's the problem. That is the problem, because when people expect inflation to be able to come, then you will also see that they will prevent it. And, the accumulative effect of that will be that there will be higher inflation. So the problem is simply that this is it's come out now of the bottle. The genie's out of the bottle, and it cannot push it back in again. It'll take decades now. And so the uptrend now in inflation is here. And that's the but. I think you're going to see a big decline first in it, and then you'll see that it actually bottoms out at a higher level than what we saw back into 2020. So we are at the end. We are at the point where John Maynard Keynes, the great macroeconomist from the 1930s, there, he said, well, he was asked, so what do you actually do at the moment when you have been stimulating? All of a sudden, you're down at zero, and interest and inflation starts to go up. And then he said, well, in that time frame, at that point, we'll all be dead. He said, in the long run, we'll all be dead. That's what his answer was. He actually didn't, reflect on it. But it's actually the point we're at. And the point where you come to a, just look at the NVIDIA's chart today. I mean, it's extreme. And look at the evaluation of it. You come to the most complete and fantastic valuation levels you can get by just pumping money into the system. And at some point, you'll find out that throwing money on it will create inflation in the real economy, and it may look nice in the bubble charts, but they will also come down if the real economy rolls over.
Mm-hmm. I mean, I really appreciate your ability to cut through the noise and simplify the global macro trends. But to your point, we see this reoccurring pattern every few years. Central banks, they seem to be facing large refinancing needs. The system comes under stress, liquidity tightens, and then new liquidity is injected into the markets after a pullback. And that is
Mhm.
ultimately shaking wealth up to the one percenters.
Mhm.
And my question is then, with the rise of digital finance, it seems that stablecoins can function as a synthetic dollar. And of course, they're cheaper to issue, they're faster, and that's what they'll sell us. But you see that's increasingly tied to institutional settlement rails. So, from your perspective, do you think stablecoins are becoming a new source of liquidity in the global financial system? And if so, what risks or advantages does this create compared to traditional central bank liquidity?
Yeah, it might become another, factor in the liquidity picture, but that's not going to change it for. I mean, again, we have to go down and look at Mrs. Johnson. I always refer to Mrs. Johnson. I don't know any Mrs. Johnson, but it's just the
Me neither.
hypothetical Mrs. Johnson there that sits there with a car loan, with a mortgage loan, and have seen inflation rise, trying to make ends meet, and then all of a sudden inflation has been pushing up the cost of groceries and so on. That's the real world. And I think all this about what we talk about with whatever the Fed can tell us, and and what QE can do, and so on and so forth, these are all speculative things.
Mhm.
70%, 80% of the US population is like Mrs. Johnson, and it probably is, and that will be in the high range, income wise, if you look across the world, of the middle to low income people. And they it's not about stable coins or liquidity and so on and so forth. By the end of the day, it's about for her to make ends meet, and it's about her to be able to put food on the table. And if that is not happening, well, then she'll spend less. And that's not just her. That's actually millions of Americans
Mhm.
and people around the world.
Hmm.
So all the talk, that's why, again, cut to the bullshit, right? Cut the bullshit out, really, right?
Yeah.
Take that out, because liquidity cannot help us. You can look at liquidity charts and look at the M2, or look at whatever kind of liquidity chart you want to do, and then look into the 2001 crisis, so the dot-com bust, and you can look to the 2007, 2009, and you can see liquidity went up and up. It didn't help.
Hmm.
So this about that, even though they put liquidity into it, it will require that Mrs. Johnson, that have now seen inflation rise, that has seen yields rise, that has up to here to her neck with an mortgage loan and a car loan or whatever. Well, she has to think, oh, fantastic! Those $100 I just saved on my mortgage loan, I'm going to take those out, and I'm going to go down and spend it, and preferably also actually borrow another $100, and then in figurative speaking here, but then actually spending those money as well, because that is the only way you get that stimulus thing going. People think that
Certainly.
stimulus will just work. It only works through the psychology of the human being sitting there and actually making that decision, which is the 70%. The
Hmm.
rest, will it explode prices on the market? Yeah, I guess. But will it create wealth? No. And there is a big difference, and this is the problem that I think it seems like central bankers do not understand. There is a the big difference between the real economy and the financial economy, and we are seeing those diverge now. So if you
Mhm.
look at, for instance, you look at the number of open jobs, you can see that, and you look at the S&P, you'll see that they normally go and they follow each other like very nicely, and then all of a sudden they just diverge. And the thing is, that's because you're simply seeing the economy is not, it's not at that state where the financial world is, and that is a risk factor to the financial world, because guess what? By the end of the day, if you're going to see what I think we see, a slowdown in the economy and a recession, markets are going to catch up with that reality at some point. We have seen
Yes.
it over and over again, especially when you have speculative bubbles. And anybody who thinks that Nvidia is not in a bubble, which and the rest of the Nasdaq as well, you need to go, get an appointment with a doctor somewhere, because it is. There's an insane bubble, and that is it's going to burst. All bubbles burst, and this one is going to go as well, and that is the problem. So whatever liquidity whatever mention of QE or how we can come in with the crypto and the digital world, that's not going to save Mrs. Johnson. And it's
Right.
all about Mrs. Johnson.
Well, as a follow-up real quick, that's the thing.
Agreed.
To your point also, I agree with you as well. But every time the debt burden grows larger each cycle, and it's by design, obviously, it requires even greater injections to funnel the wealth to the top.
Mhm.
That's how they're widening the wealth gap. It's just with digital financial rails now being built. You know, the question is like, okay, is this going to be a mechanism for more controlled, programmable liquidity injections? You know what I mean?
Yeah, sure. But all of that, again, you have to go down to the psychology of, again, there might be a, whatever. I'm not smart enough to understand and see that. Probably you're right. I mean, I can see that, but I understand the mechanics of the economy.
Mhm.
And what you're talking about is liquidity in the whole factor there. And if it does not go into something that changes the behavior of Mrs. Johnson,
Yes.
then it's not going to change anything. And
Doesn't
there are
make a
not,
difference.
it
Oh.
doesn't make a difference. And that there are no new ways, because everybody will say, yeah, but then this time, no, the mechanics of the economy is the same like it's been for hundreds of years. There may
Mm.
be some factors that does that, more participants and things, information are moving faster, and so on and so forth. All these things, yes. But
Mm.
deep down is the psychology of the human being, and that's why you have the business cycles that can tell us where we are at, and they tell us that the situation is really serious at this point here. And I hear people saying, yeah, but Henry, because you don't understand this, and that, and AI is going to save the world, which first of all, I don't understand
Yeah.
anything of, because I mean, if one thing I can see is that, the structural unemployment is going up, which means that people are unemployed for longer. Why? Well, maybe because Mrs. Johnson there again, who is 50, like, old fart like myself, does not know too much about digital, or does not know too much about AI and so on. And for her to make ends meet, and on the same time, just, refreshing her, knowledge of whatever it is, it's darn difficult. So this
Mhm.
shift that we are seeing here with AI and so on, yeah, but that going to make the companies more productive, right? But then you have a situation with 25% of the people who are, falling off the train in terms of, being able to participate in that market, in that economy. So yeah, AI is going to be the next big extreme shift here, and the technology is, it's going to change everything. I'm not in doubt. But it's not going to be a quick fix to anything, and neither is any kind of artificial, digital, whatever, call it, liquidity that comes in. Because again, you have to think to yourself, how is it going to help her? What is it they're going to help her? And I can't see that link, if unless somebody can tell me that.
Yeah. Can I ask one more follow-up question? I'm very sorry.
Sure.
Is that okay, Vandell? Well, to your point as well, but this is also why every fiat system in history, when they eventually collapse under this debt expansion you're referring to, that's why gold has been historically there to reset the system. And that
Correct.
can lead us into that conversation shortly here after. Okay, I'll let my brother go ahead. I'm sorry, I don't want to hijack the
Yeah,
whole conversation.
no, it's okay. You made a good point, Verson, and Henrik, absolutely agree with you and the angle that you're looking at it from.
Mhm.
For a while, I think even since 2009, financial markets have been primarily driven by artificial liquidity, complete disconnect from the real economy. And at the moment, it's becoming extremely clear. It's been clear for a while, as you said, but it's very clear at this point for anybody paying attention. And I don't think liquidity will be a sustainable bandage per se. Now, my question is, since we're at the late stages of the cycle, and all markets, all financial assets are, for the most part, in a bubble. I do agree with that. It's very clear. My question is on the crypto side. You did say we have probably a few more months to go, it looks like. Do you have specific range or targets in mind for the crypto market cap, Bitcoin, XRP, Ethereum, or where do you think we could go? And we're not, trying to take that at
No,
face
it's fine.
value, but
No, gotcha. I'm used to that, and it's but I've had said for a long time. I mean, when I went went long Bitcoin around 16,000, and I said I think it's going to go above 120,000. I stayed with that for a long time, and also when we were down. And so I've been on that side for a long time, and on the bullish side, because there's been no reason why not to. I mean, it's just been a bull market again based on the business cycle that I have. What I think we'll see is that there will be we're actually starting to see the slowing of the Bitcoin now, and that is the phase where Ethereum then takes over, and which tells us that we're not the 500,000 or the 1 million or all that. No, we're not going to see that. We're gonna see no, but that I've been in
people that think
various,
that.
panels, yeah. But when I kind of said, well, guys, at what point would you think that Bitcoin is starting to maybe see somewhat of a top? Yeah, well, not if we're not, as long as we're below 1.6 million, then there's no talk of that. And I'm like, okay, let me get out of here, because it's just crazy talk, right? So
It is, yeah.
we are at a point where I think we can go to 140 really soon. Probably also see 160, and I could even see 180. But there are some levels, the Fibonacci levels, that tells me that probably going to be around that level. What I think can move really fast and really quick is Ethereum here, and I think also the Ethereum Bitcoin ratio talks of just at the current level that Ethereum should be a bit above. Could be above 13,000, and I actually think Ethereum could go to 17,000 or 20,000, which is extreme. And if you start to do the math, then you said the market capitalization then on things. Well, then you could see those two together add up to 5.5 trillion or something like that, and then you could have the crypto market on top of that, which could add another. Maybe the same, maybe 4 trillion. It could be 9 trillion. It could be, I could even see 12 trillion in terms of the to complete total crypto market. And it's insane. And you actually saw 2017, the total crypto market was 750 million. Then you saw it was 3 trillion in 21. And now could actually do the 4 trillion as four times up to the 12 trillion could make sense. It looks like that. But again, I mean, I hardly can believe the charts either myself, but it has worked out like that before, and you can see some extreme moves all of a sudden in this. And I think we are on the verge of something that can go really fast because we just need Ethereum now to find its legs again. And then I think we have the next move in Ethereum, pullback, and then the last move. I just want to say that, and I think that is going to happen the moment we get bad non-farm payroll numbers, which means negative numbers. That is the moment where everybody will say, okay, now the Fed will have to be convinced, and that's when everybody then will flock into the room to get into crypto, which will, because we all know liquidity will help it to rise.
Yeah.
So I think we're going to see extreme levels coming to crypto, but people can't really. But like you said, there are so few months left. Yes, but that's actually the extremity of this. That is the extremity. It's going to go really, really fast, as I see it.
So that would be the catalyst, you think? One of the catalysts.
That's one of them. I think the Fed is already pivoted here now with what we saw. Just at the Jackson Hole. There was quite clear that it seemed like, okay, now we can see that there is a deterioration in the labor. I don't know which. I would love to just spend one day at the Fed just to understand what they're looking at. Really,
take some notes.
Take some notes and just say, well, guys, why don't you look at? No, anyway, but yeah. So it's I think they will start to realize how bad things are, and then everybody will see that they have to do something about it, and will say, okay, the Fed is going to come in and support everything, because normally by the end of things, we have the sentiment that the Fed has our back. That is normally when we top out. So I can only see that when the numbers are bad enough for the Fed to step in, or for everybody to. Excuse me. This is what I have. Excuse me.
It's okay.
No, you make a very good point.
And when the Fed, then everybody will realize the Fed has to step in, and that can be so. Yeah, a trigger, or maybe early October. Could be for the banana phase. I think Raul Powell calls it. I like banana. So I like that phrase because it looks like a banana, and I think you'll see that again as well. So I think he's got a point on that.
So do you think the Fed is waiting for panic? They're waiting to the last minute to react, because we're currently in a global rate cutting cycle. Central banks are easing policy. As we know, the Fed is always the last to react. They're pretty late to the party by design, I think. Do you think they're waiting for something to happen before they step in, start some form of QE, rate cutting, easing
I hope
policy?
not.
Um,
I
how
hope
do you
not.
see
I
that?
mean, if they're waiting for something to happen, then they really do not. Then they overestimate their own powers, because it's like, when you set something in motion with that kind of momentum, it's really about momentum. And I think people that studies mechanics, physics, or something like that would understand that if something with the momentum of the global economy starts to have a direction or move in a certain direction, I mean, it will be difficult for them, also with the lag that you have of when you start to lower rates and do QE and whatever, before that actually goes through to people. And so the cycle, the momentum of it all will actually, accelerate things before they can start to happen. So if they do that, then they are playing, a dangerous game. What I thought they were doing, I thought they understood the business cycle, and they would start to put force, against, in the other, nudge the economy in the other direction, as you started to see it actually starting to slow. For some reason, this time they got themselves so convinced that trade tariffs are a bad thing, and I think it is, but I don't think it's a bad thing for. I mean, it's not that bad for inflation. I know now we saw the PPI numbers and so on. It's going, yeah, but there's something also called the consumer effect, which means that if prices rises, it's not like the consumer just goes out and spend double. They will actually then have to buy less. I mean, the economy, the consumer doesn't all of a sudden just get double the amount of money. So the problem with this is that you may see that it generates an imminent or short on a few goods, that it can just rise in price due to this kind of due to the tariffs. But Mrs. Johnson there again, she doesn't have all of that sudden $200. She just still have $100. You'll have to spend that then more, on less on fewer goods then, and that is the problem. That's the income effect, it's called in economics, and that will keep inflation in check. So I don't understand why they have been paying so much attention to that, because yes, it's a bad thing as an imminent, immediate effect, but just the follow-on effects of that will be that it's actually a negative on consumption. So the Fed is, I don't know again, I would like to spend a day there. It would be
How
interesting.
much do you see them cutting rates by, if you had to take a guess? Because expectations are now around, I guess, September, maybe 25 basis points. Personally, I think they're going to do more, but I don't know. What do you think about that? How do you see that?
I see that September 15th, there's like 17th would be is actually kind of a pivot point for markets. And I previously, when they was the the expectation for a cut was at zero for it. There was no expectation of any cut there. I said I think they can do 50 basis points. I still have that on Twitter or on X. I did that a month ago or something. And I see. I said that because I thought that they would start to see that the bad numbers would come through, and then we actually had the bad numbers coming through with the non-farm payrolls and the revision on that. I'm still in doubt of 25, 100%. I mean, I'm 100% on 25, but there will be more if it's 50 or actually maybe even more. And I think they could be at a point where they think, okay, now things are actually getting to worse than we thought, and they will see with their revised non-farm payrolls and looking at May, which was it 14,000 and 19,000 in June, or it was the 19 and 14,000, and then apparently 73,000, I think it was for July. I don't believe those numbers at all,
course not.
because you can see
Flawed, of
I
course.
don't believe those numbers at all. And it's and Goldman Sachs, and I think they're right, as it says that we're probably going to see a big revision here. I think there's a revision coming. I can't remember. Is that September also, I think?
Yeah.
I think you're going to see a big revision to these numbers. Also because if you looked back in what we've seen also for the last year here, it's just been strange numbers, and the economy doesn't seem to be at all at that place where the non-farm payrolls were really the only ones saying, oh, things are great. just
Yeah.
great. And then you can look at everything else, and the consumer confidence and everything is just down. And it's like, no, it doesn't look good. So I think we could have two situations there when they get out in September 17. We could have a situation where they actually come out and spook the markets by a 50 or 75. I don't think it's 75, but 50, and that will spook the markets, and that's why we have a correction there.
It's like pricing it in advance.
Yeah, something like that. So and it could also be that they come out and do too little, and that's also. But I think we know that historically when the Fed starts to cut, and I know they cut a year ago, but still this will then be the continuation then, is close to when markets can top out. And
Right.
let's see. We could be as close as that to the market top. It depends on where we are with the S&P and so on, but that's what I'm keeping an eye on. Which levels are we at there when we get to that point? Where will Nvidia be at that point? Also one of the leaders. Where will the FANG stocks? And then we'll see whether we have a little extra time, or that could be the turning point. But we are getting closer to that turning point, because the Fed coming in is a sign that they can see also that the economy is not in a good state.
Well, if I could follow up and add something to that, I think if we could recap back to crypto, the market cap being driven to 12 trillion, 8, 9, 10 trillion, I think tokenization of real world assets, that's really going to drive a lot of this market cap you're talking about.
I think that the whole ledger and blockchain and everything is going to change the world. The technology there is, and tokenization, smart contracts, and all that's going to be. It will change the world completely. It will change. It will make it easier for us to trade. It will make it easier for us to hand over properties and so on and so forth. All these things here, yes, these are real things. And again, which will, by the way, help Mrs. Johnson also down the road, because there will be things in the world that will be cheaper and easier and so on. So these are the real shifts. I'm not sure it's going to help us much on the short time frame, because you're still in, it's like in every bubble. If you go back and if you go back in the 1840s, you had a railway bubble actually, and everybody ran that back then. And fantastic, you can actually have a own part of a railway, and you can and there were thousands of companies coming up. Then you had 1920s, you had electrification and the automobile, and you had a lot of things coming out. New technologies. People again front ran that these kind of technologies coming out and saying, but that's not the same thing as a sure return. It's a great technology, right? And what you mentioned here, great technology is going to change the world. I can't even imagine how, but it's not. People have already think, but because it's that, then you have to understand that it's going to be fantastic and the returns are just going to be great. But have you looked at it already? I mean, have you looked at so I'm just thinking that the technology will change things, but it's not going to help us in the short time frame. And actually, I think a lot of people are already taking, this into their consideration in terms of saying, okay, things will be fantastic. Hence, these things will move up a lot. And that's why the AI stocks have been rising. That's why crypto has been developing as they have, and so on. So great technologies, but will not save us at this point.
One more thing.
I agree.
I'll let my brother go. This is a different kind of question, because I see a lot of Vandell and I are very macro as well, and we pay very close attention to pretty much every angle of the market. But there's a lot of institutional narratives versus the reality of what's really taking place. And
you need to exit liquidity.
Well, that's one thing. But if you pay attention to the mainstream news, and we know mainstream news is not necessarily to be trusted, but the institutions constantly mention Bitcoin. It's almost like they're trying to program people in the reports and all the speeches. But the thing is, when you look under the hood and you look at the actual infrastructure adoption, what's really taking place, 500 plus banks, 1,700 non-disclosure agreements, central bank adoption, central bank pilots. It seems to be Ripple's XRP's technology that's actually being in use, not necessarily Bitcoin. Why do you think the institutions keep framing these asset narratives around Bitcoin when in reality, the infrastructure that they're describing and that's being adopted at scale is Ripple XRP ledger? Do you think this is misdirection? Do you think this is politics, or simply just a narrative management?
It's easier to talk the Bitcoin case, especially when Bitcoin has been doing so well over the last few years here. So I think that's the way to do it. They can be certain, as you also said, Vandell, is that it could be something with exit liquidity. I mean, and also it can be, they don't know better. I mean, it's not like I think they may see that thing can just continue to rise, and they don't really understand that by the end of all of this, there needs to be the true technology down beneath everything that will have to, rise and come up and say, this is why we have the whole crypto fog of cryptocurrencies and so on. This is the new, brave world where we'll see how the technology will be used. And by the way, it's going to send, a lot of wealth and, benefits to a lot of people. I don't know which ones. And now you tell me that these are the ones that is actually being used. I don't know that could be true. And that could be because that may start to show that that's actually the technologies down beneath that will actually make a difference. But I think, looking at those bankers, they don't know. I mean, I think they just talk. I mean, they don't even know their own thing. I mean, and just because we call it cryptocurrencies, it's not like it's a banking thing. It's actually a technology thing. So if you have to understand something about that, you go to a techie guy. You don't go to a freaking banker. And the banker will just follow whatever people are saying and say, "Oh yeah, Bitcoin, I've heard it's fantastic," and it's like, and then he can see the chart goes up like that. So of course, I think that's it. I mean, I think people like to just talk down beneath. Look at people's actions, and then you'll understand what they really. So I appreciate you said that, because I think I'm not sure Bitcoin is going to be the one thing that is really going to change things a lot. I know people like to think so, but I don't think it is.
We don't think so either.
Yeah, but you said before, and I was listening to some of your podcasts prior to this interview, and I heard you say that thousands of cryptocurrencies that are out there. You said roughly about, and I'm maybe not accurate on this, but it was roughly around 10 to 15 projects that would ultimately survive. And you're talking about the infrastructure, and that's the distributed ledger technology. That's the investment. That's where their vested interest is. It's not so much the speculative nature and all the leverage out there. And that really struck a chord with me and my brother, because it's something we've long believed, right? That in the end, it's not about the noise. It's about the technologies that provide the infrastructure value.
I have a saying, sorry about that, Vandell, but I have a saying where, when we have these technologies coming out, it's really just study history. It's actually quite interesting. And I know when I say the 1840s, I always look to people's eyes and say, oh my God, is he talking? But the steam engine, it was a crazy thing. I mean, we could all of a sudden travel across the world with the locomotive, and you could start having manufactured processes with machines and so on. It's crazy thing. Electricity coming out 1920s and so on, and every time you have these big tech things coming, technology advances coming out, you will see that there is a fog of things because people don't really understand it, and I don't get it. I don't see which one of these that are going to. I can guess that it'll be like, as I said, 5, 10, 15 of these that will come out and really shine, and they'll probably be fantastic projects, and 10 years down the road we'll all say, why didn't we see it was that one, because we should have, and then we could have been billionaires, all of us. Well, but that is the thing. I think there is a fog around this when tech comes out, and it's actually because a lot of people just see, there's interest in this, there's money in this to be made, and then all the shitty things comes in, and that creates that fog around the new technology that actually makes it very, very difficult for us to understand what it's all about. But cut to the core. What is it that will change it? It's down to the technologies down beneath the cryptos. It's not going to be because of WIF or Bitcoin or whatever it's called, and it's not going to be anything with crypto, and it's not going to be DeFi. It's not going. I can promise you that the U.S. will not allow, the U.S. administration will not allow that you have Bitcoin or any other thing will come in and take over the role of the U.S. dollar. And they will not. And it's and when you say to people they will not be able to, I can promise you they will be able to. They'll just say, if you hold it at some point and you use it, you'll go to jail. And then people tend to stop. So they can. And that's why it's the technology. And I don't know which technology, and you probably know more than I do that in terms of what will be happening. But the technology and the fog around the technology creates this confusion, which creates bubbles, and that's where people first lose money. But the real money is to be made from those who can figure out which of these are actually going to make a lot of money down the road. And I would love to hear from anybody who knows more of this than I do.
Oh my God, we have so much to
Well,
talk about. I'm going to send you everything.
Okay, sounds good. Sounds good.
Yeah, definitely. What's interesting, just a quick note on what you said. We absolutely agree with you. There's a fog around the space, and it's such a wealth transfer vehicle. Every few years you have a bear market, a bull market, easy money. Get in early, get out late. Simple as that. And the financial elites, institutions, hedge funds, let's be real. They know this. Okay. They've been participating in it since 2009. There's a reason it lines up with the liquidity cycle, which coincides with the debt refinance cycle. They know the game. Okay. So smart money, they get in, they get out. But I agree with you. There are some that will, when things bust, just like we saw in the dot-com bubble, we're seeing a very similar pattern. There will be a few big players that will emerge from the ashes. They will survive. They will thrive. They will shine over time. And those will be the winners. And we're going to see the same thing like we saw in the dot-com bubble with the crypto bubble. So, yeah, you're absolutely correct.
You're preaching to the choir here. I can tell you, it's exactly what I see as well. So it's about that. I mean, I'd love to see your stuff, guys, on what you see in crypto, because trying to educate myself a little more on what actually will be the big winners there, because I'm buying Amazon down at when it was just a small baby, and of businesses would be fantastic, and the same with Google and so on. And I think this is it. That will be good. But do I think it will be Nvidia? No, I don't, because you can see it's crazy valuation levels, and it's like it's AI, and it's like components. It's something completely different. It's those who understand to use the technology, the ledger, the blockchain, and so on, in a new fashionable, in a new manner, which really will create value to the world. Those will be the winners. Those will be the winners.
Agreed. Yeah. I have a quick question. Last thing, Versant. Sorry. So for cryptocurrencies, we talked about we're in the bubble. We probably have a couple months, maybe a little longer to go, and eventually it's going to bust. Just like every bubble historically, a bubble turns into a bigger bubble. It can be bigger, but eventually it will have to deflate, contract, and a lot of people are going to get hurt because they don't understand the dynamics here of the bubble and human behavior, which is a reflection in the markets. So my question, Henrik, is first of all, two questions. First of all, what do you see the cryptocurrency XRP going to price-wise based on these liquidity cycles? And second question is
XRP. Yeah, go on.
Oh, okay. Don't worry then. And the second question is, how steep and deep do you see this correction when it does happen?
Let's try to see if we can get the XRP first. Well, it looks pretty bullish to me right now, I have to say. But again, targets, I mean, it's difficult to say. It's I wouldn't be 3-4 times from here, no problem. I could see that easily. But again, I haven't actually gone into greater depth of actually analyzing. But it seems like I should analyze the XRP a little more if I listen to you guys. How big of a crash is it gonna be? Well, when you have the largest market bubble in the world, looking at market capitalization to GDP, and you're looking at all measures, especially if you cross them, you'll see that it is by far the biggest one. And you have the speculation. I think you'll see that a 9 trillion market of crypto, where Bitcoin takes up 1/3 of that, or a little more maybe. You will see that Bitcoin will probably, I mean, I dare to say it. I think Bitcoin is going to crash to at least around 4,000. I think 4 to 16,000 as I'm going to see.
Wow.
And I think that is based on the tech setup that we have. And honestly, it's quite, from a technical perspective, it's almost, it sounds weird to say clear, but it's 16,000. Yes, 100%. I think we'll go down there, and nobody really sees that. And if you have that, you will see the micro strategies. You'll see all those just collapse, and you'll see a lot of businesses actually having problems because they've been so wise to take all this, speculative money or whatever they call it, or crypto, onto their balance sheets, and they're going to be regretting that. So I think it can be really, really bad, and that's not the one thing. You also now start to see pension funds actually starting to take this on, and you will see that, or the people putting it onto their 401s, and you'll see that people that have been pulled in late phase here also say, oh, now the media's in Denmark start to say, oh, Bitcoin is Ethereum now also, and they start to talk about these two, right? And people starting to move into it, and I'm getting more calls now. And which one should I buy, right? So you're gonna see a lot of people lose a lot of money, and I think that's just one place. And then you have the housing market that will also go bust. So if you look at the housing market, you look at the crypto, you look at the stock market, and I easily see 80% decline in the Nasdaq. As I said, easy.
Yeah.
So.
That's very steep.
Well,
but that was 85 you saw in 2001. I mean, and that was .coms, and you say, yeah, today, but that's different. No, it's not, because you have actually such a, if you look at Meta and others, they are just extreme in terms of valuation. So I think you're going to see a very, very steep decline in things, and it is the biggest bubble. So the biggest bubble probably also requires the biggest bust. And when people realize that you can't just putting money into the system again will not blow the bubble back up again, you probably can see. And if you get right also on a stagflationary development down the road, that is not going to be good for things. So I can see a very big decline, crash, and it will not be a one down, because of course the Fed will come in, they will bounce it, and then I think what will change the whole setup this time is that, as I said before, inflation has entered the arena now, and when that starts to become a problem, when the Fed comes in, well, then you can actually see that as Mrs. Johnson doesn't spend her money, she sets on it because she saves it for a rainy day.
Yeah.
Well, then the economy will slow in actually turning, and prices are going to rise, and that's stagflation, and that's not good. So that can actually become bad.
That's like getting into a recession, really.
Oh yeah,
depression.
But but it's also important to note on Bitcoin, it does follow these cycles you refer to, but the Bitcoin cycles, if you really understand them, it's not just market mechanics as people continue to describe it. It's an engineered wealth transfer. Every time it peaks, it starts to sell off, while the people pushing the Bitcoin narrative keep telling people not to sell your Bitcoin. Well, if nobody's selling, then who is cashing out the top? And it's really the spectators who are losing those gains and handing their wealth to the ones who got in the early days. So retail is exit liquidity, and that's why the institutions
100%.
are so vested in keeping this cycle repeating over and over. So, to your point, then a real store of value is still gold. It really is.
Oh yeah. Yeah, definitely. And if you look at, there are some important, good ratios. That if you look at the SPX versus gold, I actually put a tweet up on that today, put a Substack article out, I think, also on that. And you can actually see how we have had 4 times in history over the last 200 years where we have seen it actually breaking down. So the SPX gold ratio. So SPX measured in gold, you can say. And those 4 times was 1929, when the largest bubble to that date burst. And the second time was in 1971, which was when Nixon went off the gold standard, or actually took all the convertibility off, shut that down. And then you had 2000, which is a bust of a large bubble, and then you had 2025. And this tells me that when you had it in 1929 and you had it in 2000, those were probably the whole stability of the stock market and so on. And people will say, oh, shoot, there's something is happening now, and we better go to something that of safety. 1971 was not such a big crash in the market like that, but it was when the financial system maybe came to question. And I think we actually have a combination of that today. I think we're going to see the largest bubble, the largest stock market bubble ever bursting, and also potentially having the US dollar, the financial system, coming into a question here again. And we could see that at least also the rating agencies are now speculating the US debt, right? And you can't say US dollar without saying US debt. So that is, as part of that question already. So I think if you look at that, you'll say that, well, maybe we have something of a gigantic thing going on in gold. Though
Yeah.
I don't think, and that's what I'm saying is, I think that narrative has already again run its course for a little while now. I think the pullback is there, and I can only see, because I'm still seeing a dollar that goes to around 122 on the Dixie. Dixie goes to that around in a bust. We have to understand that if the floor opens up and we get this, things are starting to happen really quickly, there will be a lot of bankruptcies and restructuring and so on, and that all goes through
Consolidations.
dollar. Yeah, go through the dollar. You gotta have dollars. There will be a demand for dollars to get all of that settled, and that's why it can go up much higher than people can understand, because the large debt levels we got. So I think the dollar will have that kind of rally, and it's going to crush everything, and that's why the Fed will be forced to step in. So and at that point, I think it'll be fantastic to be in gold, silver, precious metals, commodities. I think we're going to see the biggest commodity bull market starting off. Actually, I think that it started already in 2020, and I think we have now a bigger pullback because of what we have. And then I think you're going to see it accelerating and becoming the next big thing, which will be about real economy again and real things. So there will be a commodity bull market going for the next, whenever we go past the bad things and the big declines. So then they will see that there will be some commodity companies that'll be really good money, good value.
Of course. I mean, that's real preservation of wealth, though. And that's the thing we're trying to teach people as well. And to add to your point, also the paper to physical ratio of gold is massively distorted. It's been tightly controlled. It's getting to a point where I think everyone is starting to figure this out. Banks are hoarding it at record pace. They reclassified it as a tier 1 asset class. So if I was to look at the dynamic, how this is playing out, they're trying to front run people on all of this. And there could possibly be a repricing of gold in the coming years. Who knows? But it's happened before. But finally, I would say with stable coins, and this is where the conversation really changes and gets very interesting. I've been reporting on this for years. The World Gold Council said that they are looking for a network, private sector, to build a stable coin that would ultimately replace the dollar. And of course, I don't see that happening for a long time, but that could be the trajectory. I mean, we don't know, right? It would be very good for gold holders, but it would be very bad for a lot of other people out there.
Yeah, sure, absolutely. I get you. I think when we have to, if the stagflation starts to unfold, then there will be a need for some kind of return to sound money, and that's the only way to actually have some kind of monetary reset. I think in 1944 kind of situation, and all countries will then have to show their piles and say, okay, this is what I can come up with, and then it will be a kind of a basket coming up, new world currency of some sort, which will then bring back, and we can print it because it's not just one country any longer. It's actually a basket of countries, and it's based on their holdings of gold, and there probably would be some kind of digital element to it, so it'll be easy, make it trade easy in the world. I could see that. Yeah, exactly, like that, and they'll make checks of balances clear. So, and which everybody will then just turn to and say, hey, I want to trade with Argentina. Which currency do I need? I can just trade in that currency, and that world currency. I could see that as a natural solution to this, but we will have to see. The politicians first of all need to understand there's a problem here, the bankers of the world, and we have to go through all this horrific thing. The best thing would actually be if we could get to that point right now, and since somebody that's clever enough simply saying we are in a bad fix here, and the Fed has not doesn't know shit about what they're doing, and there's no way they can do anything about this. Is the hole in the economy is the size of the hole in the Titanic, and it's going to sink. So let's do something about it in advance. Unfortunately, that's not how things work, and we will need to see the pain before we can get the solution. But I think that is the solution, because that would then create inflation would then could be stabilizing, and inflation at 2, 3, 5% can actually work. You can have had good growth rates even in those environments, but you need to flush the world from the debt. And I think that is the will be part of the monetary reset. Also, there will be a lot of debt restructuring, forgiveness, and so on, and that is needed for this new cycle to get started. And it's a massive task, and everybody will sit and hope for. Nobody actually sees it. I think we're the ones that actually should do something about this in the future, but they will get educated to a level, and so they'll have to get this through. Otherwise, a stagflationary development can be very, very bad, and you can have people with pitchforks in the streets. And if there's not one thing that politicians are afraid of, then that's the sentiment of that. If people are starting to, then they'll start to listen and say, oh wait, what should we do about this, right? And but for now, we have to drive over the cliff first, get all the damage to whoever is in that car, and then we will see if we can figure out the solution at a later stage. But yeah, it seems like we are pretty much in line with what we expect.
Absolutely. Yeah. I really look up to you, Francis, and Matthew Piepenberg. I love you guys.
Oh, really? Yeah. We had a good heated debate yesterday also, so that was interesting. It probably comes out in the next few days here. So
I'm excited to see that.
Francis and I, we are diverging a bit. I think we are all agreeing on the end game here, but it's not just that. I think we had the dollar game. We have the dollar path first, and a strong dollar path, because you won't just get to that situation without having all that pain that a strong dollar is going to bring in. So I think we're going to see that first.
Yeah. Well, final thing I'll say, my end game, what I see happening behind closed doors, is that gold is going to become collateral again for banks. And I do think XRP is going to function as that mechanism for value transfer and also be the bridge currency. It targets so many things. So I think these two things go hand in hand. It's not practical to use gold in a digital era. You need some mechanism that functions like gold. And even the CTO of Ripple once said that XRP is like digital gold. And they also had it on their website in 2017 saying that we aim to become the world's reserve currency. And then they took it off.
All right. Oh, really?
Yes.
Fact. Yeah.
Interesting. Yeah.
So again, Henrik, we really appreciate your time and for you being here today. But I do have one last question, and to get your thoughts before we part ways. So once this crash happens and the bubble pops, a lot of people would argue and say, hey, the Fed's going to step in with emergency measures, save the day. You don't think that will work, correct? Or it would be very slow?
It's a 100% certainty that they're going to step in. Yes.
Well, how are you positioned?
But as you said, also, I don't think it will work. I mean, I really don't think it will bounce the market. Again, back to the Mrs. Johnson, just think of that all the time. What is she going to do? And how fast is she going to do it? And in 2008, when the stimulus came in, people jumped to it and say, oh, now I can live here for free now. It's fantastic. I mean, now our debt levels are just so much higher. The price levels are just so much higher. Houses are just, much more expensive, and so on in all terms. So I think that you will see that they will do that. The Fed will come in, but the dynamics of the economy has simply shifted. And they've shifted. And the one very, very clear indicator of that is that what I said before, the shift in the inflation regime, which is so clear. There's a shift in the inflation regime. That does not mean inflation can come down, but it's going to move up higher over the years. And if that happens, then you're going to see that this with the QE is not going to happen, going to help a lot. And the Fed's hands will be tired, and they will be able to do as much. So that is the big shift here: the psychology of Mrs. Johnson and the Fed's hands, and that's why they will try. But it's going to create some backlash at them, some counter dynamics that they do not expect, and that's why it can actually become a really bad thing. So to people it says, but the Fed is coming in, and then I'm like, where did that blind faith in the Fed come from? And if they really, and secondly, if it was so easy that you can just print money and everything will be fine forever, it's not like you can't do it for a certain while. I mean, there is a good saying here in Danish: if you want to stay, if you stand out in the cold and you want to stay warm, you can piss your pants, and it feels nice and warm for a little while because but then all of a
Funny.
sudden it's not so good any longer, because when it starts to freeze cold, it's not, and there are many bad sides of that. So it's not, you can do that, but it just, you can't keep doing it. You gotta do, and when you're taking that warrant for a little while, you gotta see the downside of it, and that has taken a longer time than we could expect. But we're coming to that point. That is one of my changes. So yeah, I think it's not going to work this time. Not to the degree people expect.
Okay. You make a very good point. And the last question is, how are you positioning yourself in this scenario at the moment?
I am extremely long risk, I would say, right now, and crypto, and even shit crypto. So I mean, it's like, because the rotation is going on, and it may take a little while for some of the smaller stocks and people, or smaller cap altcoins and memes and so on to start their move. But I think it's going to come, and I have some that is also. I got some stocks that are exposed to Ethereum. Also, some of these the MicroStrategy wannabes there on the Ethereum side, and then I have. So I'm really into risk at this point, because I think I think I tell myself I have a good idea of when things will start to unfold or to top. There are things that I look for, and we're not there yet. So that's why, and that's how I position here now. Later, when that comes out, I'd rather stay in cash. And people say, yeah, well, how can you stay in cash? In a deflationary environment, it's fine to stay in cash. And then I'll stay, in something that is an ETF or cash related to the US dollar, because if I see the strength in the dollar, so something that the dollar, when it rises, it will do really well. And I think there are some ETFs out there. I think I'll put some money in that. I'll have some in bonds and the likes. Nothing related to anything in the risk market at all. And then, we have to see then what happens after that. But if we get a stagflationary development that I think we can come later on, it will be all about I'll probably be gold and silver, and especially gold and silver miners. They'll be fantastic to buy. I think there'll be some commodity-based businesses. I have a few in sight that I think can be generational buys here, that have just started the new move after 2020, and then starting to move down again. And I'm just looking at the levels and then saying, well, down there, great buy. So I think that is what I'll do, and then so it will be this whipsaw, so that there's the blow off top, deflation, stagflation, and it's going to be extremely difficult for people to navigate in. And I think there will be a lot of pension funds also having problem if they go with their normal 60-40. There are many pension funds here in Denmark that go by 60-40, and then after in 2022, they saw all of a sudden that they lost money both on bonds and on stocks. And if we get a stagflation development, we could see that again. So I think that a lot of pension funds can get into problems as well. So it will be difficult for a lot of people. But that's how I think I'll try to navigate things.
Yeah.
Got it.
I mean, I have a large
Thank you.
position of cash, dry powder, if you will,
There you go.
waiting
That's
for
not
any
too.
major corrections, and then I'll just kind of go all in, patiently wait.
You're like Buffett. I mean, my idol there out there. And I think but he's his cash holdings right now are bigger than it's ever been before. So it's you're probably
Yeah.
thinking
I
along
get
those same lines.
people ask me all the time, or say to me even, Versan, you're holding too much cash. I've said, well, there's too much leverage in the system. Any of these banks
Absolutely.
could collapse and go under, and we've seen it before.
Yeah.
But also it provides opportunity. And finally, I use cash to purchase assets with anonymity, like gold and
Yeah.
silver. I buy
Yeah.
all my gold and silver in cash. I don't want anyone knowing I own it.
Well,
Yes.
Henrik, we very, very much appreciate you being here on the show today and taking the time to speak with us and share a wealth of knowledge with the audience. We'd love to do this again in the future, if you're
Yeah, sure. Let's do
available.
that. It was a really interesting conversation, and I would look forward also to seeing some of your material on the cryptos that might become the real
The
value
real deal.
creators in the real deal in the future. Yeah, it would be nice to see. Great.
Well, I had to
Yes, we'll
display this
definitely
real
share
quick.
that.
I had to display it. This is actually the screenshot of it, because it was removed from the website, and this
Mhm.
we had to catch this long time ago. But this was in 2017.
Mhm.
We remain more committed than ever to the simple goal of making XRP the world's. That was on the Ripple website.
Interesting.
Anyways,
Yeah.
I'm going to send you the legal documents from
Right.
the big institutions, and hopefully we can have a conversation on that next time.
Sounds good. Thanks.
Thank you, Henrik. We'll talk soon.
Good.
Have a
Well,
good day.
thanks. Bye.